In today's video, we're going to take a look at the PIMCO Corporate and Income Opportunity Fund, ticker symbol PTY. This is the 12th video that's a part of my portfolio series where I'm doing an in-depth analysis on all 31 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 12th in this series does not mean that this is my 12th favorite stock or my 12th largest holding. Also note that because I own all these holdings, I am biased towards them, so do your own research before making any investment decision for yourself. Also, let me know if there's any improvements to this series that I can make going forward. Feel free to check out last week's video, which was on 6th Street Specialty Lending, ticker symbol TSLX, which is a 10% yielding dividend stock that's had a long history of beating the market. Also, feel free to check out a video I did about 2 weeks ago on PTY, which is another PIMCO fund that's quite a bit different from this one. So going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 192.253 shares of PIMCO's PTY fund. This fund pays monthly dividends, with their last being for 11.88 cents per share. With the number of shares that I own of this fund, I receive roughly $22.84 every month in dividends. The PIMCO Corporate and Income Opportunity Fund is a closed-end fund that invests in fixed income markets around the world. PTY invests in corporate debt obligations that are rated Baa or BBB rated and in the highest non-investment grade categories. Their fund focuses on intermediate maturity bonds across multiple industries and sectors, including technology, healthcare, and financial companies. The fund also invests to a lesser extent in things like municipal bonds, US government bonds, agency MBSs, and commercial mortgage-backed securities. Given the nature of its investments, this fund focuses on high monthly income first, followed by capital appreciation. According to this fund's website, PTY invests at least 80% of its net assets in a combination of corporate debt obligations with varying maturities and other corporate income-producing securities. Right now, this fund trades for $13.69 per share and offers investors a dividend yield of 10.41%. PTY has been a popular investment for both income investors and retirees for more than 2 decades, given how stable the monthly dividend distributions are and the relatively stable share price. Although it has been suffering from some of the same issues as PTY has, it's been less severe for this PIMCO fund given what PTY invests in. If we expand the share price performance for this fund since being launched, we can see that it's remained pretty consistent. I know by looking at this chart it does look like there's been some pretty big swings, but over 90% of the time this fund's share price has been between $10 and $20 per share. PTY fully recovered from the pandemic and grew to a near all-time high before suffering in our high interest rate environment. If we look at this fund's total return with those dividends being reinvested, we can see some pretty impressive results. Over the last 20 years, PTY has provided investors with an average annual return of 10.9% according to the DRIP calculator from Dividend Channel. That's resulted in a total return of 733.5% since its IPO in 2002, and a $10,000 investment would now be worth over $83,000. If we compare these returns to the S&P 500, it's actually outperformed the index by almost an entire percentage. That comes out to an extra $13,000 in earnings over this same time period. Actually, before the bond markets went sour, this fund nearly saw a 10x total return. So let's take a deeper look into this closed-end fund and see how it's been generating these superior results. For starters, just like PTI, PTY is a closed-end fund. I won't go too in-depth here because I just covered this topic, but a closed-end fund is a pooled investment security that holds a wide variety of different investments. It's very similar to an ETF, but there are some very important differences. Closed-end funds can use leverage in order to boost returns on their holdings, which is something that ETFs and open-end mutual funds don't. They're also actively managed, meaning that you have fund advisors who hand-select everything that goes into them. There's also a fixed amount of shares of a closed-end fund, and the only time they can generate new shares is by having a secondary offering or by reinvesting the dividends. This results in CEFs charging higher expenses than the other two types of investments. With that in mind, let's go ahead and take a look and see what's inside of PTY. Roughly 13.95% of what's inside this fund are mortgage-related. This is a huge difference between PTY and PTI, which if you recall, PTI holds over 31% mortgage-related investments. I know that's made a lot of investors nervous given how there's been a lot of speculation around another mortgage-related crisis happening in the next year. So far we haven't seen it, but I will say that I have been reading the news and looking for updates pretty often on the real estate market. Only 1.21% of PTY's portfolio is made up of commercial mortgage-backed securities compared to PTI's 10%. The largest holding inside this fund, if you couldn't guess already, are high-yield credit securities at about 32%. These are bonds issued by corporations that offer higher than average yields. The reason why they offer higher yields is because they have lower credit ratings. The two main credit rating agencies are Moody's and Standard & Poor's. These two groups provide independent and transparent opinions on credit risk through their credit ratings. They assign credit ratings which go anywhere from AAA being the safest down to C and D ratings, which are considered very high risk. Standard & Poor's and Moody's give their ratings to bonds, preferred stock, as well as government entities. Here's a chart of their ratings and also what grade and amount of risk is associated with each level. According to PTY's fund description, their closed-end fund invests in bonds that are Baa rated and BBB rated. So this would put their investments right around the medium risk category, just above non-investment grade bonds. Non-investment grade bonds are considered one of the riskiest types of bonds that are just above default bonds. They come with significantly high yields because they come with a significantly higher amount of risk. But according to PIMCO's description, PTY invests in bonds that are right around the medium to medium high risk area. What's helped this fund though is that PTY holds thousands of these different bonds, which helps in diversifying their holdings. Going back to their sector allocation, 14.45% of what's in this fund are in non-US developed bonds, which are investments in non-US countries that are well established, like France, Italy, the UK, and so on. You can see they hold investments in emerging markets, investment-grade credit, municipal, and other types of holdings. Their industry breakdown is also pretty well diversified, with their largest sector being only about 7% of their total portfolio. Their investments are in everything from technology to healthcare, banks, aerospace, utilities, broadcasting, and so forth. So although the market breakdown is well diversified, I know the investments inside of PTY will definitely make risk-averse investors nervous. And PTY definitely isn't as safe as the funds that hold investment-grade bonds and municipals. But there's a couple things that I think investors should keep in mind here. The management team at PIMCO have a whole group of credit analysts who research and reflect on the creditworthiness of every single holding in PTY on a daily basis. That's definitely not to say that these credit analysts won't make mistakes, but they've done a great job with this fund for decades. Anytime there's been a sharp fall in this fund's share price, like during the pandemic and the 2008 financial crisis, it's always recovered. If we look at PTY's dividend history, we can see that their dividends have changed a few times during their history. I'm using the graph from CEFconnect.com, which I think does a better job in showing their dividend distributions than Seeking Alpha, which is what I normally use. But since this fund's launch in 2002, they've had a history of decreasing and then increasing their dividends. For example, in 2002, this fund was paying roughly 13.5 cents per share in dividends each month, but then in 2007, they dropped it to 11.5 cents. A few years later, they increased it back up to 13 cents per share, and then fast forward to today, it now pays 12 cents per share. So it's had a history of decreasing and increasing their distributions as time goes on. Since its launch, it's never decreased more than about 2 cents per share though. You can also see that in some years, PTY issued a special huge dividend at the end of the year if they collected a higher amount of interest income for that year. They did this last year when they gave investors a special dividend of 15 cents per share. But as I mentioned earlier, the main issue facing PTY and PTY are the rising interest rate environment that we're in. In 2022 and 2023, we saw the Federal Reserve make record-breaking interest rate hikes that we've never seen before. This caused a lot of chaos in the bond markets and resulted in a huge amount of losses for a lot of fixed income investments. But as I like to remind people, the bond markets aren't going to remain bad indefinitely. Although it may take some time, the Feds are going to decrease interest rates, and when they do that, then I expect the bonds will go back up in value. When that happens, that'll cause the share price and the NAV of PTY to recover. But like I said, it'll probably take until next year for this fund to see some good growth, which is when the Feds are expected to finally start lowering rates. Until that happens though, I'm more than happy to hold on to my shares of this fund. Just like with PDI, I didn't start investing in PTY until the fund's share price fell pretty significantly. I didn't start investing in PTY until about here, so although I'm currently underwater, it's not that bad for me. Another downside to PTY at the moment is that it's very overvalued. It's a very common argument brought up against this fund because it's trading at a pretty sizable premium at 23.46%. But it's during moments like this that do require some research. Most people do know that it's usually a bad idea to invest in a stock or a fund that's very overvalued. But the issue with some closed-end funds, including specifically PTY, is that some of them are almost always trading at a premium. What you're looking at is a chart that compares PTY's share price and its net asset value. The teal-colored line is the share price and the orange line is the NAV. The last time this fund traded around its actual value for more than a month was all the way back in 2010. It was fairly valued again for a short period in 2015, but PTY spends the overwhelming majority of the time being overvalued. The reason for that is simply because investors are willing to pay more for a higher quality investment. So if you're the kind of person who says, I'll wait until it's not overvalued, then you might be waiting a very long time for that to happen. But in summary, PTY's been a really solid investment, and although it doesn't offer much growth, it's still beating the market with its huge monthly dividends. But with that being said, that's going to wrap up today's look at PTY. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.